Hey everyone, and welcome back. You ever get that uneasy feeling when you see the market hitting those record highs and you're kind of thinking, isn't this when you're supposed to sell?
Uh-huh. Yeah, it's like everyone's waiting for the other shoe to drop, right?
Exactly. And we're tackling that feeling head on today. We're diving into Alec Young's report, How to Buy Low at All-Time Highs.
Interesting title, right?
Totally. So he's making a case for why this bull market might actually just be getting started.
Which seems kind of counterintuitive at first glance, I know.
Right. And he's giving us the scoop on where to find the best opportunities in this market. What do you think? Is everyone just freaking out over nothing?
Well, Alec Young seems to think so. He actually points to five factors, that are driving the market upward that, honestly, most people are totally missing.
Okay, 5 factors. I'm intrigued. Lay it on me. What's the first thing people are missing?
So think about how often we hear about, geopolitical turmoil, right?
Yeah.
And everyone immediately jumps to, oh, the market's going to tank.
Right, sell everything.
Exactly. But turns out it's not the doomsday scenario we're often led to believe.
Really?
Yeah, Alec Young, he actually looked at the data. We're talking 29 major geopolitical events since 1940. And guess what? The market actually saw an average 12.1% gain just 12 months after those events.
Wow, okay. So much for the whole sell everything and run for the hills
That's not a-
mentality.
It's a classic case of short-term panic versus the long-term trends.
Yeah.
And it highlights a really important point. Sometimes what we think of as market risk can actually be an opportunity.
I like the way you think. Okay, so if geopolitical turmoil isn't the market killer we thought it was, what else is Alec Young pointing to?
Well, he dives into this whole everything is priced in argument.
Mm.
Like the idea that the markets already factor in all the good news.
Oh, absolutely. I hear that one all the time.
So Alec Young argues that three major things are working in the market's favor right now that, frankly, most people just aren't even considering. Falling long-term interest rates, oil prices being down, and a weaker dollar. Now, here's the thing. Those things aren't signs of a struggling economy. They actually can drive growth and boost those corporate profits.
So there's actually more good news on the horizon that the market hasn't fully priced in yet.
You got it. And get this, when we've seen both oil and interest rates drop like this before, historically, the S&P 500 has seen an average gain of nearly 19% in the following year.
Okay, now those are some numbers that get my attention. But hold on a second. Doesn't a weaker dollar hurt American companies?
It seems counterintuitive, but actually, no. A weaker dollar means bigger profits when those international sales get converted back. And since almost 40% of S&P 500 company revenue comes from overseas, that weaker dollar is actually a huge advantage.
That is a really interesting point. I would never have thought of it that way. So we're talking potentially huge gains here that most people aren't even considering.
Precisely. And this is just the tip of the iceberg.
Ah.
Alec Young doesn't stop there.
Okay, you've painted a pretty compelling picture so far, I gotta say.
Uh.
But what about the flip side? Like, if all these signs point to more growth, wouldn't everybody and their brother be jumping on board?
Right, you'd think so, wouldn't you?
It almost feels like we're missing something obvious, like everyone else is in on a secret that we're not.
I get what you mean. But here's where it gets interesting. Alec Young actually uses investor positioning as another data point. And it suggests that, get this, the opposite is happening. He talks about this low volatility strategy that's actually outperforming right now.
Low volatility. Okay, can you break that down for me? Like, I'm a 5-year-old who's just learning about the stock market.
For sure. Basically, I mean, investors are playing it super safe right now.
Yeah.
They're all flocking to these stable, low growth companies.
Oh, interesting. So almost like hunkering down, waiting for the storm to hit.
Exactly. It's like everyone's bracing for a market drop that might not even happen.
Huh, I see.
And think about this. When a bull market is really ending, you usually see the opposite, right? Everyone's chasing those risky, high-growth stocks, trying to get those last wins before things go south.
Right. Makes sense.
So this whole low volatility thing, it's actually a good sign. It suggests that this bull market might still have some legs.
Okay, I think I'm starting to get it now. But if we're buying in this all-time high environment, where are we even supposed to look? Where are these so-called buy low opportunities hiding?
Well, Alec Young, he highlights 3 specific areas with honestly huge potential. The S&P Small Cap 600, the S&P Mid Cap 400, and then the entire healthcare sector.
Okay, so smaller companies, healthcare, got it.
And the thing is, they all have what's called a low PEG ratio.
PEG ratio. All right, now you're just using fancy words to sound smart.
No, I promise it's not that complicated.
Okay, good.
Think of the PEG ratio as a measure of value, like how much bang you're getting for your buck when it comes to stocks.
Hmm.
A low PEG ratio, especially if it's below 1, suggests that a company or like a whole sector is undervalued compared to how much its earnings are expected to grow.
So kind of like finding, I don't know, like a vintage t-shirt at a thrift store that's about to become the next big fashion trend.
Exactly. Like it's a hidden gem that the market hasn't fully caught on to yet.
I like it. Okay, so how does that apply to what we were just talking about?
So all three of those areas, small cap, mid cap, and healthcare,
Mhm.
they're all kind of flashing those undervalued signals right now with these low PEG ratios. And that's what Alec Young is excited about. It means they have the potential to grow even more, and investors haven't fully priced that in yet.
Interesting, interesting. So we're not just talking about stocks that are cheap for no reason. These are like potentially undervalued areas that are just waiting to take off. This
Exactly.
is what I'm wondering, right? So we've got these sectors, they seem undervalued, but how do we know they're actually going to grow? Like, how do we know they're not just cheap for a reason?
Well, it's not just about looking at, numbers on a spreadsheet. Alec Young and his team at Map Signals, they actually track what's called institutional sponsorship.
Institutional sponsorship. Okay, now we're getting really into the weeds here. What does that even mean?
So think of like the big players, right?
Yeah.
Pension funds, mutual funds, these huge institutions with a ton of money to invest.
Mm.
Institutional sponsorship is basically seeing where they're putting their money.
Oh, okay. So it's like following the smart money, seeing what the experts are betting on.
Exactly. And the cool thing is, Alec Young's team, they're seeing these institutional investors putting more and more money into those same areas we've been talking about. The small cap, the mid cap, and the healthcare sectors.
Huh. Well, that makes sense. I mean, these big institutions, they've got analysts, algorithms. They're not exactly like throwing darts at a board when they're making these decisions.
Right. They're doing their homework. They're doing their research. It's like being at a party, right?
Yeah.
And you see this group of like world-renowned chefs. They're all huddled in a corner raving about this dish you've never even heard of.
Okay, I'm definitely trying that dish, right?
Exactly. It's not a
But
guarantee, but it's a pretty good sign that you're onto something special. And that's kind of the edge Alec Young is trying to give investors a way to spot that potential before everyone else catches on.
that's why I love doing these deep dives. Okay, so let's bring it all home. We've got these buy low at all-time highs opportunities, especially in those small cap, mid cap, and healthcare sectors. What's the big takeaway for our listeners?
Don't freak out when you see those headlines, those record highs. Sometimes what looks like the end of the bull market, it's actually just the beginning of something new.
Right, right.
And it's all about understanding what's really driving that growth,
Yeah, huh.
looking beyond just the surface.
Absolutely. So I guess the moral of the story is don't be afraid to do a little digging of your own. You might just find your next big investment opportunity.
Couldn't have said it better myself.
That's all the time we have for today's deep dive. But as always, keep learning, keep exploring, and happy investing, everyone.